Imagine this scene. You open your chart. Red and green candles flicker on the screen. Your heart is pounding. Your hands are slightly shaking. You tell yourself, just one more trade. If this one works, everything will change. And then, boom, the market snaps back against you. Seconds ago, you felt like an absolute genius. Now, you just want to shut everything down and disappear from the world. If you've ever felt that, congratulations, you are not alone. You just stepped into the exact story that 90% of traders on this planet go through. But the reason they quit isn't the market. It's not because they're not smart enough. It's not because their strategy is wrong. They lose because they defeat themselves long before the market does.
Most traders see this game as the ultimate shortcut. People hate debt. They hate the daily struggle. They hate feeling stuck. So trading looks like an escape. It shines bright like a casino light, promising freedom, massive wealth, and total independence. But it never tells you this. Trading is a psychological war, not a quick race to escape poverty. It seems easy from the outside. You watch a few strategy videos, catch a couple of lucky wins, and suddenly think, I understand the market. But understanding the market isn't about memorizing candlestick patterns. Understanding the market is about understanding yourself. Most traders quit because they enter with the wrong expectations, and reality hits them far too quickly. When the dream collapses, they conclude, trading isn't for me. The truth is, trading is only for those patient enough to wait for their own maturity.
Let's talk about the #1 killer of traders, the emotional war. Think about the classic trader who knows technical analysis inside and out. They have a strategy, they have experience, they know everything, except how to manage their emotions. When they win, they feel invincible. When they lose, they feel completely worthless. This is the chaotic emotional roller coaster every amateur rides. Green days breed overconfidence. Red days trigger panic. Panic leads to account blowups, which end in despair. Without a psychological anchor, you get dragged around by your own mind. Watch out for the red flags. Revenge trading after a loss because your ego is hurt. Randomly increasing your position size out of misplaced confidence. And focusing entirely on the money instead of the quality of your decisions. The market doesn't punish you for losing, it punishes you for being undisciplined. In trading, you are often far more dangerous than the market itself. Now, let's enter the territory almost nobody talks about, the silent killers. First, unrealistic timelines. People study 4 years to become doctors, engineers, or lawyers. But with trading, they expect a stable, life-changing career after just 4 months. They quit not because it's too hard, but because they didn't give themselves enough time to get good. Second, ego. Ego hates being wrong. It hates cutting losses. Ego forces you to hold on to losing trades just to avoid admitting defeat. Third, fear. Fear of losing money, fear of wasting time. Fear constantly whispers, stop now before it gets worse. Fourth, comparison. You see someone making $10,000 a day on social media while you're literally shaking over a $50 risk. Comparing your day 1 to someone else's day 100 kills motivation faster than any losing streak. And finally, loneliness. Trading is incredibly isolating. No colleagues, no boss to pat your shoulder, just you, a screen, and amplified emotions. Together, these hidden reasons form a mountain that crushes millions of careers every single year.
If you're still listening to this, you are already part of the small group who truly wants to survive. So listen closely to this core message. Trading doesn't reward the smartest people. It doesn't reward the luckiest people. Trading rewards the people who don't quit. Survivors look at losses as information, not a personal punishment. They know mastery requires time,
not a few lucky green days. Discipline is something you train, not something you just magically feel. Success comes slow, but steady if you stay long enough. You don't fail because you lack ability. You fail because you don't stay long enough for your growth to finally kick in.
Most new traders think the problem is a flawed strategy, a bad indicator, or a rigged market. But the brutal shift happens when you realize the enemy isn't on the chart. It's inside you. The turning point comes on a normal day, after a normal losing trade. Instead of getting angry, you pause and ask a vital question. Did I actually just trade my system, or did I just react to my emotions? That question changes everything. Truth is, you don't need to beat the market. You only need to beat the version of yourself from yesterday. Professional traders don't try to win every single time. They simply try to be a little less terrible each day.
If you ask professional traders how they survive long-term, you'll hear the same 10 principles over and over again. This is the survival psychology framework. 1. Neutral mind. Pros don't trade to prove a point or make money back. They trade simply because a setup is valid. 2. Small losses first. Amateurs avoid losses. Pros embrace small losses as the literal cost of doing business. 3. One good setup is enough. Stop system hopping. Master one setup so deeply you could trade it blindfolded. 4. Kill hope, build structure. Hope keeps you stuck in a losing trade. Structure cuts it automatically. 5. Risk is everything. Never ask how much you can make. Always ask, how much can I lose if I'm wrong? 6. Process over result. Praise yourself for executing a correct decision, even if the trade ends up red. 7. Consistency is boring. If you are trading for excitement, the market will destroy you. Embrace the boredom. 8. Avoid comparison. It's your chart and your journey, period. 9. Trade capital you can afford to lose. Financial stress completely destroys logic. 10. Stay long enough. This is the ultimate rule. While others get discouraged and leave, you continue to learn. Eventually, the money flows toward those who stayed.
To see how this evolution works in the real world, look at 3 traders who almost quit, but pushed through. First, there's Maya. She used to take 40 chaotic, emotional trades a day. After a single devastating loss, she completely shifted. She stripped away her indicators, focused on just one setup, and limited herself to 2 trades a day. Within months, she hit true consistency. Then there's Daniel. He faced 4 straight years of losses. His friends mocked him, but he hung a quote on his wall: "If I don't quit, I can't fail." He kept his losses tiny, protected his capital, and by year 5, his deep market experience finally clicked. And finally, Ethan. He was ready to give up because he kept comparing his small wins to massive profit screenshots online. A mentor gave him a reality check. Stop comparing your lap 1 to someone else's lap 100. Ethan shut out the noise, focused on his own execution, and went full-time 6 months later.
Every single trader must navigate 5 distinct stages of evolution. Stage 1 is the illusion phase, where dopamine runs the show and you think it's easy money. Stage 2 is the chaos phase, the emotional roller coaster of revenge trading and FOMO. This is the graveyard where most people quit. Stage 3 is the awakening phase, where you finally realize that your own emotions, not the market, are the real enemy. Stage 4 is the discipline phase. You finally keep a structured journal, stick to fixed rules, and find that trading has become beautifully boring. And finally, Stage 5, the consistency phase. Self-destruction is gone and your account growth becomes exponential. Once you identify exactly which stage you are currently in, you know exactly what you must do next. If you are still watching this, you are serious, you are committed, and you have already gone much farther than 90% of the people who start this journey.
Remember, losses don't kill your career. Your ego does. Mistakes aren't inherently bad, but repeating them is. Moving slow is completely fine. Quitting early is the only true failure. The market doesn't reward you for being the smartest person in the room. It rewards you for being the one who stood back up when everyone else stayed down. The breakthrough lives right on the other side of perseverance. Subscribe to Trader Mind Secrets and comment below with the stage you are currently in. Keep showing up, keep mastering your mind, and I'll see you in the next video.